Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP, which is a limited liability partnership firm incorporated in India and having multiple business domain. Today, we are going to speak about a very interesting topic, which is fixed income market in India and Masala Bonds. I hope you heard about this topic many times in the newspaper, and also fortunately the business channels are covering this topic very carefully. But our YouTube channel, which you understand, we always present you something different than what this media and other thing is going to present you. Now, what do you mean by Masala Bonds? Now, we'll take a small break here and first explain what do you mean by Masala Bond. Now, as we understand that INR do not have any acceptability anywhere except India. It's not a currency like dollar, GBP, euro, yen, Chinese yuan, which is turning out to be a SDR currency by October 2016 and so on and so forth. So Indian government shooted one arrow keeping two targets. I'm sorry, it's not Indian government. Indian government along with Reserve Bank of India shooted one arrow with two targets. Now the first target was to institutionalize Indian rupee outside India. And second target was to make sure that the fund requirement which India is having, and especially the information technology, basically the infrastructure sector India is having, that is going to be met. But unfortunately, both the targets are not meeting what they termed as a Masala Bond. Now, what do you mean by Masala Bond? Masala Bond is nothing but an offshore Indian rupee issuance by a person who is in India. In the last few time, the two Indian corporates have raised the Masala Bond. Number one is HDFC, number two is NTPC. Now I am going to speak about something about Masala Bond. Two issuer, Indian largest mortgage lender HDFC Limited and India largest power producer NTPC, have been on the road to secure investors for such bonds since last November month. But they are not yet launched their respective issues. This is a little old paper, but they are done with now. HDFC has begun talking investors since November, and NTPC is concluding the marketing. But there are variety of issues that we have with the Masala Bond. Now, Masala Bond is an Indian corporate sitting in India issuing INR denominated bond with a minimum tenor of 3 years to 5 years to the people sitting outside India. Now, rather than taking an ECB, which is external commercial borrowing, or FCNR, foreign currency non-resident window, they are going to invest, they are going to issue this INR as an offshore to people sitting outside India. So basically they are meeting up their requirement. Unfortunately, this particular stuff is not turning up well for the particular investors in India. How? Number one issue is the offshore issuance of the INR denominated bond. Indian rupee is not an international currency, that we need to appreciate and that we need to agree. We should take our patriotism at a second place, but we need to appreciate that Indian rupee is not an international currency. Henceforth, issuing an INR denominated bond may or might not work, and unfortunately this is not working nowadays. Although till now we had only two issuance when it comes to the Masala bonds. Number two, HDFC issued recently 30 billion, which is 3,000 crores of bonds, which is 3,000 crores, which is 447 million at an annualized yield of 8.33%. Issue number one with Masala Bond. If today in India you are issuing anything at 8.3%, would you sincerely be interested to go to outside India and issue this at 8.4%? You would never be. Now there is a case here. For HDFC, they raised 500 crore recently with a 3-year bond in India at 8.35%, and offshore they issued at 8.33%, which is very well not good. So if I have a company who can issue in India, I would definitely love to issue in India at 8.33. Why I should go offshore and meet so many regulatory requirements and issue at 8.33%? Well, you have second school of thought, which suggests that if you go offshore, you would have different type of investors, you meet different people. Why you focused on one country? It could be thematic in nature and so on and so forth. There could be a variety of ways in that. Another problem is when it comes to the yield of Masala Bond is when it comes to sorry, I missed that word, which is tax of 5%, withholding tax. Now if you have 8.33% and you are paying 5%, then you are paying the withholding tax of 5%, which is approximately 40 bips. That is again your cost. And we understand that Indian tax system is highly arcane in nature. They are not going to reduce this withholding tax from 5% to 1%. So that again you need to pay. Third problem, hedging of masala bond is an issue. Now I'll give you an example. I am Goldman Sachs, a trader in Goldman Sachs. HDFC Bank issuing a masala bond. I wanted to invest in that. Now I am an American company based out in US. I am investing in an Indian bond. I have a currency risk and credit risk. Credit risk we are not talking about here, we will talk here. I have a currency risk because I first converted my dollar into INR. Goldman Sachs would first come convert their dollar into INR and then they would invest, for which they will get 8.33%. Now they again need to convert their INR into dollar. The second video pertaining to that, which is the hedging of masala bond. Now there is a currency risk that they need to hedge in the offshore, because who is taking money offshore, where you are issuing money offshore. Now if you are investing in, if you are doing in offshore, sitting today, offshore stands for, which is Singapore, New York, Dubai, Philippines and all. It's approximately 6.5%, 1 year cost with no taxes. So tell me one thing. Somebody is coming to me and saying, I am giving you 8.33%. And I am saying, I have a hedging cost of 6.5%. It means the net return to me is 1.8%, and when I am saying hash, I am saying before taxes. Who is going to make me intelligent that to invest in a masala bond? And when I am saying hedging, then I am saying you need to invest in the offshore. You should have lines in the offshore. Point number 4. RBI net spread for is less than 200 basis point. We showed here 180 basis point. Although if you read the live mint, basically the live mint case which they share, which is here, which is 6th of August, which you can see here, pricing emerges as the biggest hurdle for masala. They showed that the 1 year non-deliverable forward is between 5.5 to 6%, which we disagree. As a corporate treasurer, I disagree with the fact the 1 year non-deliverable is approximately 6.5%. So you will get less than 200 basis point, not 300 basis point. That's something you need to think about it. Because newspaper reported this at 5.5%. No, this is wrong. Fourth is, RBI simply cannot copy dim sum. We know we are in India. Whatever we do, we always copy. From where this masala bond came? Masala bond came from Chinese term dim sum. Chinese created a bond called dim sum, wherein they allow the people sitting offshore to invest in Chinese yuan. But one thing which we need to understand, that India is not China. Indian rupee is not yet institutionalized versus we have the Chinese yuan. Chinese all scheduled to join the SDR 1st October 2016, but India, there is no site that Indian rupee even think of joining SDR. How can you simply create a bond called masala bond to copy dim sum? Second thing which we need to understand, the volatility of the dim sum which pertains to Chinese yuan is extremely low versus you have volatility in INR. Volatility in INR is very high versus volatility in the CNY. Sixth point, Indian corporate is not in a situation to offer better INR interest rate. You understand that where Indian corporates are heading. Current government already spent 2 years in the system. System is not going good. Profitability is not growing. Indian IT companies in a deep mess. Manufacturing in a deep mess. In fact, e-commerce companies, Flipkart asked 1,000 people to go from the system. They want to give a pink slip to 1,000 people. Do you still think that Indian corporate are in a situation to offer a better rate outside? And if as a CF of the company you are in a situation to offer a better rate, then why will you go with the masala bond? Because here you need to pay the withhold of 5% extra. You would love to do in India. Why I will issue my bond outside India, wherein there is so much complication and so on and so forth. I would love to do here in India with no such complication and no withhold. Point number 7. October 2016, Chinese yuan all scheduled to join the SDR. Do you think that the India INR is scheduled to join the SDR? It will take so much time for Indian rupee to even think that they will get an opportunity to join SDR. Point number 8, and very important. Indian bond market are extremely shallow. Indian bond market are extremely shallow. What do you mean by extremely shallow is, you are not US where the bond market is 15 trillion. You are not Japanese where the bond market is 10 trillion. And you are not China where the bond market is 5 trillion. And this figures is of 2015. I repeat, you are not US where the bond market is 15 trillion. You are not Japanese where the bond market is 10 trillion. And you are not China where the bond market is 4 trillion. In fact, not 4, it is 4.5 precisely. How much bond market do you have? $500 billion, and that includes the GSEC also. With such a shallow bond market, which technically is known as liquidity, with shallow liquidity, do you think that you would be able to promote Masala Bond in India? Chinese can do so with dim sum because they have that. There is no point of US because US is an international currency. Japanese already have, which is samurai bonds. Yes, sitting today, we need to ignore this fact that majority of the Japanese bonds are having negative interest rate. They want to go for a helicopter money and all these kind of choices. That's something which we need to ignore as of now. But yes, they have a mechanism, or they have the market wherein they can do so. But India cannot. Last but not the least, RBI to allow Masala Bond as a vital instrument in the corporate bond market, and for that they need to give the repo status to Masala Bonds, which is not the case. Repo and SDR, sorry, repo and repo status. Do you think RBI is able to give repo status to Masala Bonds? No. Do you think RBI is able to give SLR status to Masala Bonds? No. So these are the few points that we have to kept while taking an investment in the Masala Bonds. One point which we not discussed and which we are going to discuss in the next video, but we are going to give you just a highlight about this, which is CDS, credit default swaps. Tell me one thing simple. I am Goldman Sachs. I invested in a Masala Bond of HDFC, which is yielding 8.33% for me. Currency risk is on me, which I need to hedge in the offshore, which cost me 6.5% sitting today. We all understand that post Raghuram Rajan, and considering the fact that the market is facing so much volatility, then INR is all scheduled to depreciate and will move towards 70. Then who will call me an intelligent person to invest in a Masala Bond? And when talk about CDS, this is credit default swap, which is a credit risk. Now tell me one thing, Indian credit rating is BBB minus. BBB minus since long, even after 2 years of the Modi government, the credit rating has not improved. And considering the fact that the Indian banking system is in a mess and Indian corporate sector is in a deep mess, the profitability is not rising, which includes the information technology companies. Do you sincerely think that I should take up a position in that bond, wherein I not only hedge the currency risk but also the credit risk? Sitting today, the CDS for India is more than 100 basis point, and that cost we not added as yet. What would happen if SDFC defaults? What would happen if NTPC defaults? Before NTPC you have a sovereign guarantee, but do you think with the SDFC do you have a sovereign guarantee? No. I need to take the credit risk, and that credit risk is my cost. So in nutshell, Indian government tried and copying the dim sum, but we forget the fact that dim sum is about Chinese yuan, which is the second largest economy of the world, and Chinese are already institutionalized and they are already internationalized. But Indian rupee is not. So don't try to copy it, right? You first need to resolve some fundamental issues like your withholding tax issue. You need to resolve the issue of the credit risk. You need to resolve the issue of this hedging risk, and then in that you can move forward. I hope this video serves a purpose to you. Our contact details are treasuryconsultingllp@gmail.com. Our alternate email ID is rahulmagan8@gmail.com. My contact number is 9899242978, and you can call me on the Skype, which is Skype. My ID on the Skype is Rahul5327. Thank you and have a great day.